story of the moment has to be gold, absolutely plunging down another 9% right now on top of a almost 20% plunge already from the peak. Does the decline make investors want to return to the oldies but goodies, the dollar, the euro, the yen, the traditional currencies, or maybe Bitcoin? Let's ask the man who runs one of the world's largest currency hedge funds, John Taylor, Chairman, CEO, and CIO of FX Concepts. John, the gold plunge, some people say gold's a currency. Does that make the dollar and the euro and the yen more attractive?
Well, gold dropped just like Bitcoin.
Yeah, they've been tracking each other.
Yes, right. So, I mean, I would say that the drop in gold does make currencies more attractive in general.
What do you think of Bitcoin?
I think it's hot air.
So you're not putting any money there?
No, I wouldn't. I mean, it's there's no liquidity. I mean, nobody could ever manage any money in there. It's a game.
I was just going to say, with the gold move like this, what we've seen, more than 20% from the peak, how does that make you rethink your positions? You want to buy it?
I think we're getting close. We actually, about 2 weeks ago, we wrote a piece that said we had about 2 weeks to go before we thought we might reach a low. Now, obviously, this has been more aggressive than we would have thought. But we haven't decided to buy. It's like catching a falling knife, and this one is falling pretty fast.
You want to wait to see it stabilize first?
Absolutely.
And where do you think it could stabilize?
Well, I would say 1250 to 1400. So we're there. I mean, I think
we're sub 1400. We're at 1376, and it went down as low as 1355 today.
I know. So it's kind of in the range, right? There's no doubt about it. I mean,
why is gold attractive to you at that level? But what makes it appealing at 1300?
Well, because the governments are very much involved. And if gold drops, it states very deflationary things about the world. And they don't want that. They don't want deflation. So,
but do you think gold, I mean, this is the question we were wrestling with earlier, John. Do you think gold is dropping because people are taking a view that deflationary pressures are going to accelerate? Where? I don't know, because the Japanese are doing everything they can to create inflation. Right. And here we're beginning to talk a little bit more about inflation, even if we don't see it.
Well, and we had Rosengren come out and talk about the lumber trucks driving by his house this morning. Or whatever.
Fed chief of Boston.
I think that they're wrong. I think we've just about passed the peak because we have Europe going into a slowdown. The U.S. is finally beginning to to react to sequestration and to the tax increases in January, and we're not going to have a hot second half.
So given your world view right now, whose currency of the group do you want to own?
The dollar.
The U.S. dollar.
Yeah.
You've stuck with this position for a long time. In fact, last year you were calling for the euro to weaken substantially. It still hasn't really done that. Here we are, almost at 131.
Now, well, Draghi is, Europe is playing it, what strikes me as a very ridiculous game. Because they're managing the country for Germany, not for the rest of
the continent.
Europe, for the continent, right? And at this price, we had the trade balance come out today, and the trade balance was good. Why? Because imports were way, way down, right? And exports were flat. Whoopee. So basically, you had a country that's not growing, right? And they have a very, very high exchange rate. Why?
Is George Soros right, John, that, and maybe you have the same view, that eventually Europe is going to be forced into its own round of quantitative easing? The Germans are going to have to say mercy, and they're going to follow the U.S., the BOE, and the Bank of Japan.
Right. I've been told that by two ex-central bankers from Europe, from Northern Europe, who said that when pinch comes to
push comes to shove, there.
Whatever. No, pinch squeak.
Oh, I see.
When the pips squeak or whatever. When the pips squeak or whatever, the Germans are going to give in.
To a weaker euro.
Have to give in to a weaker euro. I mean, the choice is worse. I mean, I think Ackerman came out today and made a comment along.
Joseph Ackerman, the former CEO of Deutsche Bank. Well, he said that that a strengthened eurozone is better than less worse than the lack of a euro.
Exactly. They have to have it, and they have to. In order to do it, you have to treat all 300 million people equally.
What is going to be the trigger for when Mario Draghi will do it, if that's what you predict?
Well, it's how bad does this recession get to be? I mean, as everybody's come out, Wiedmann came out today, or whatever, and the head of the Bundesbank came out and made a comment that he's sticking with his forecast. This is before the IMF meeting. That's really.
So maybe Germany has to enter recession, or at least face more economic pain for that to happen.
Right. Either that or some sort of real serious revolution inside of Italy where, in fact, the bad guys win and Italy starts making noises about leaving.
John, I'm curious why you say you like the dollar versus, say, the yen. A lot of people who would say the Japanese aren't finished. 100 yen to a dollar isn't going to make them happy. They want to see 130, they want to see 140, maybe even 150. Why not like the yen in the short run over the dollar? If given the conditions and that we're in, and given what the Japanese have indicated they're prepared to do.
They're trying to weaken it.
They're trying to weaken it, actually. But I actually agree with you in the short term, because I think, it's interesting that one of the Japanese television networks was all poised to put me on TV when it hit 100. And it went to 99, 95.
Yeah, we were waiting and waiting and waiting.
Right. And then they had to go home. Nothing happened. And I actually think that it might not happen for 2 or 3 months. But I do think the yen is going to get to be very, very weak.
How weak?
125, 130.
By when?
By 2 years from now. I think it's going to take some time. But I would argue that 100 to 105 by September or something rather would be quite reasonable. But that's actually an extremely slow pace compared to what we've been doing.
Is it fast enough to jumpstart growth in the Japanese economy, rid themselves of deflation, and therefore become a game changer?
Well, I think that if it goes too fast, it's going to mess up Japan, because if it goes too fast, inflation will jump up. And remember, Japan now is a country full of old people living on pensions and things like that, and they won't like that.
What business, John, does the Treasury Department have accusing the Japanese of deflating the currency when the Japanese yen, before quantitative easing, was at, 100, 110, and they're just kind of back now to where they were before the Fed started it all?
You want the short answer? None. They have no right to do that.
Well, you're talking about the Treasury report that was released, where they specifically cited Japan, saying that they're going to monitor the competitive devaluation. It's not so much, I would think, that leaders are worried about the price where the yen is. It's how fast we're getting there.
Right. Well, another interesting thing, though, is the Japanese trade balance with the United States hasn't changed in 15 years. So, what are we complaining about? China has increased its exports to the United States dramatically. We're doing just fine with Japan.
So you don't like the euro, you like the U.S. dollar. You don't like the yen, you like the U.S. dollar. Which is your biggest trade? Which one have you been piling on the most lately?
Well, the ones we own outside of the dollar, and we actually don't own the dollar, but we're kind of even when you add the whole world together. Where our money is a lot of it is still in Latin America. Obviously they're having a bad day today. But Brazil, Mexico, Chile, they all look very good. We have been skating on thin ice with the South Africas of the world, the high-yielding kinds of things. But I must say, that's maybe thin ice.
All right, upbeat on Latin America. Always good to see you and get your candid thoughts. FX Concepts Chairman, Founder, and CEO, John Taylor.